Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Sunday, August 6th, 2023. My apologies for the lateness in getting this posted. It is 10 minutes of 8 East Coast time. And so my apologies. Let me dive right in. I am going to begin here with the SPX. I'm going to quickly go over both counts as they stand. We did end up sinking into the close pretty heavily on Friday. Now, I had left the SPX, or the cash market, in the alternate view. Here it is, but we have to continue to allow for it. And even though on my daily, I can begin to say 1, 2, 3, 4, 5 in the SPX, with 5 still needing an additional new low to kind of cement it into place. But even on the daily chart, it could be A of 4. And you can get really granular and you're bringing it down. I'm on a daily chart, and on the daily, it says you have to allow for it. Now, so that would be on the daily. If I break it down and I take a look at the 4-hour chart, it's pretty much the same thing, but much cleaner. 1, 2, 3, 4, 5. 4-hour chart breaking into the day, I can count 5 down. So it definitely, on the alternate view, it would be wave A of 4, which means we get a B wave, which, from here, I'm going to get rid of that for right now and just take a look at what a bounce could look like here. Again, this is on the 4-hour chart. Let me drop it down to the hourly. We can take a quick look. So again, 1, 2, 3, 4, 5 on the hourly chart. It's even clearer. So if it's wave A B wave can bring us back to 45.56 to 70, 45.70, and a bounce, and then we do another leg. We begin the next leg. So in other words, if it's 5 waves, and if it's an A wave, it's going to be a zigzag. Ding, ding, ding. It's a 5, 3, 5. That would then put in this 4th wave on the alternate view. So there's still a ways to unfold and still have to keep alive the potential that the market can turn and just go to the moon. Now, just to touch on that, and I'm going to take this back out and look at that a little bit shorter term, a 3-year weekly chart. If it were to go up, nothing really has changed. So you have to kind of bear in mind that if you are a position trader and you're positioning yourself for a longer term, longer or stronger decline, then hopefully you're not all in here at current levels, but maybe you can still add, or maybe you haven't started, or whatever that situation is. There's still going to be time, because if it goes up, I don't think, unless you're really a shorter term trader, I think it's going to be a quick move if we get it. If we get it. It could be a quick move and then be all done. So it's same type of a move. Now, being that I'm running, and I'm going to go right away from the SPX over to the ES, on the futures market, my preferred view does suggest that this is all over. So this is a much more important move coming off of the highs for me in terms of what the count is. And again, 4-hour, 1, 2, 3, 4, 5. It looks pretty clean and pretty nice to me. So even from here, 1, 2, 3, 4, 5. And they're not really getting this going in terms of a rally. I know we have Asian markets opening in 7 minutes. So maybe that'll give it a boost. But I mean, this thing's got to get a boost. If it's going to be, we're moving now in 3 waves up, which could give us that potential for getting back to like 45, 70-ish, or even higher, 93 in there, and then put in another, start the next decline. Because what this would be, if there's 1, 2, 3, 4, 5, if I'm going to give it the 5, it's either going to be a minute 1 or to be a minor 1. But we did finish 5 waves down on the hourly, which off of that high, which was a new high, not above the all-time, but it was a new high for the sequence. It does fit. Now, what it would suggest is that we are going to begin to drop in a primary C wave, and that primary C wave is going to have some really nasty things that it's going to have to deal with. One of them is just what's going to be happening to the underlying, right, within our indexes, what's going to happen to equities and companies. And there's going to be a lot of, it's not necessarily a reckoning, but they've been talking that the country is going to head into a recession. There's plenty of reasons for it. And in all honesty, the markets are kind of lining up with that could happen. Because if we take individual looks at which I will attempt to do again, if we take individual looks at the dollar, at the precious metals, at the different instruments, stocks, bonds, etc., treasuries, they start to line up where the move would suggest recession. So, and of course, the whole thing is that there's going to be hard landing, soft landing, what any landing, or what the deal is going to be. But if I look at it on an Elliott basis, I would be then moving out, and I'll review this tomorrow just so that I can move right along with this one and get more done tomorrow. So in any case, if we're looking at the start of the C wave down is definitively going to break that low. The primary is going to break the low let me go out. It's going to break definitely the intermediate B. Let me go out here. I should be able to see it here. It should definitively break before completing 3502, which I think is the existing low in October of 2022. So primary C wave, at least below 3502. Initially, you can start to say like 33, 32 down in this area, but on a bigger scale, there is very defined support at 2980 to 3000. Very defined, very tight, but kind of almost insistent that that's going to be a stronger support area where possibly cycle wave A could bottom, or cycle wave A could bottom up into here, which sets a lot of things up again, longer term count. So I'm not going to go there right now. Getting back to what we can look for tomorrow, or what I will be looking for. Either way, it does appear in the future as well. I can't tell from this whether that's just 1 of 5. I mean, that went pretty hard. It went very hard, and they were getting out of positions. They were doing whatever they were doing. This monetized something, this rally, they got something monetized. And I was like, don't need all this anymore. And then they jump shipped on gamma because it kind of evaporated real quickly. So again, if it were to be a 1, 2, 3, 4, 5, I would be expecting the bounce to be a little bit stronger, even in anticipation of it being correct. I would think that would give us support, getting above the 4, getting above the 8, heading towards the 50, even on the hourly chart, because this happened in 1, 2, 3 hours on Friday. So you'd kind of look, yeah, you should go back up pretty quickly. And then we'd be looking for, via the futures market, if we're looking for a wave 2 or a B wave, and this is where we're going to run them in conjunction next to each other. That's the alternate and the preferred running side by side. So right now in my preferred, we're looking for 1, 2, 3, 4, 5. This is going to be a first wave. Then we're looking for a wave 2. And so it's an ABC. ABC should, wave 2, most common, 50 to 62%. 45.65 to 45.81 with a little bit of a knock higher, can get it up to 45.90, still turn, put in the B. We come down in the next leg in a C wave under the alternate and the start of a wave 3 in the preferred. Wave 3 then really should start to kick some butt, and we're going to get below 44, 4,300, likely to 4,200. It should really start to flow more freely to the downside. And there'll be a lot of things that will contribute to that. It'll be volatility trades. We'll be looking at things that could be going on inside of the bond market, which is also still sitting on the bench. NDX it's presenting us with the same picture as the SPX, of course, is just the NDX. But out on the daily chart to look, I need a little bit more on the daily cash market to make it a cleaner 5 down. So, excuse me, even here, I can take it down to the hourly chart, and it's barely. I'd like to see it a little bit stronger, a little bit more in place, cemented into place, before I'm thinking of stepping in as a buyer. And that would be as a day trader, or even as a swing trader, because you're looking and you're thinking it's going to go. And I can do it from here. I'm just going to put this in. And from here, you'd be looking at it to kind of get itself back up into 50% to 618. Not sure what that one is attached to, so I'm going to take it off. 50% to 618. Oh, that was the other one. So, and that's 55,596 to 55,675. So not bad. And 3 waves come up in an ABC and then start to tumble again. And actually, this is a pretty congested area. Did a lot of bouncing around, a lot of comfort zone in here. So you could even get, that could be topside. 15,800 plus or minus, and to the downside, 15,635. Get up in there, and it just hangs out for a while. Over in the futures market, now again, in the NDX, we're looking at it as an A. This is the alternate. This would be A. We're looking for a B wave. There's going to be the same type of a pattern and the same type of a move, whether it's a B wave or whether it's a wave 2. Both expectations mirror each other. So let's go over to the NASDAQ, where I have the preferred count. So in the preferred count, it's 1, 2, 3, 4. I'm looking for more. I'm looking for more on the. So this is a much smaller 4 or a much smaller 2. Because if this is 1, 2, 3, 4, 1 of 5, 5 of 5, 1 of 5, this makes it a 2 of 5. Then we get a 3 of 5, 4 of 5, 5 of 5, and it could slip and it could drop. It could drop to 14,974. That's the next support level, if indeed we're looking for this third wave coming down, as it then compares to the first wave. So being the third waves are normally the longest and the strongest, and we're inside the fifth, it's still the third. Our next level, once it breaks this 100%, which it truly hasn't yet, so once it were to break that, then we're talking. But it can come down anywhere in here. Now, price support, we got it there. Then we're going to get a little bit more at 15,285 to 280 down in there. And then we have it at 15,150, 15,105, and 15,063. And then we're hitting 15,000, of course. So anywhere in there could just put in the third wave of the C. But if we get a 3, 4, 5, then of course, then I'm going to say that's a 5, and it's 1, 2, 3, 4, 5, wave 3. Then we get a wave 4. But if I'm going to put 1, 2, 3, 4, 5 and put it here, it's putting in too much pressure on wave 1 and I guess on wave 5. So in terms of the preferred count, I want a stronger low here to complete from this high to this low, 5. So we have a nice first wave, a nice second wave, and like a 5 waves, then the 3 wave, and now we're in that third. And out of this, I got 1, 2, 3, 4. The internal. And this, I think the 5 is going to be more extended. And that opens it up to here once we break that. And it could be quick. Let's not forget. The rally up took the morning. The rally down took 3 hours. The rally down. The decline down took 3 hours. One of them was, yeah. And then they bought it up a little bit into the close. In any case, that's the story in the equity markets. I do think that it's just going to be, up in the air. Right now we've got Asian markets and they're buying it just a little bit. But I still believe it's like once the bulk of the Asian markets are open, we have them to deal with what we did on Friday. Are they just going to say, oh, the selling was just because of expiration? Now we're just going to continue with what we believe we should. It's like, well, then you're going to have to factor in the news of Apple, et cetera, et cetera. There's a lot of stuff to kind of go through. The treasury markets made a phenomenal jump in a recovery off of their spike lows on Thursday, and then a little bit of a continued downside on Friday after economic data was revealed. So all of that put together, yes, we could get a little bit of a bottom in here and we could do a bounce. Now, equity market, if it's going to go in alignment with the bond market, yeah, well, then it could bounce. It could bounce a little bit harder. But it's going to just be interpretation, because in actuality, the fundamentals for each one are totally different. So, or even the technicals for each one are totally different. But again, that's the alternate versus the preferred. I'm going to end it right there. Our next update will be on Monday, the 7th.